Hi everyone, today let's talk about why the markets were down, then we'll look at the economic calendar, as well as the charts, and you can see we had a nice little bounce off of the 200 SMA on the S&Ps, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So markets were down today, and they did not like this ISM services data, which came out quite hot, and we'll take a look at that on the economic calendar. But the strong economic data makes the higher for longer mantra continue to be relevant. Not that we ever thought that that was in question, but this kind of reinforces that once again. September does have some seasonal weakness as well, so that makes sense. But overall, 10-year yield going higher based on the strong economic data. You can see September already not doing so well on the month, and the 10-year going up. Moving over to the economic calendar, you can see what we were talking about here. ISM non-manufacturing, much higher than expected. ISM non-manufacturing prices also much higher than expected. And this points to inflation as well. So if we see a tick up in inflation, that could absolutely be bad. It is worth mentioning global services PMI, worse than expected, but still above 50. And same with composite PMI, but here for the US, that is not what we want to see. Moving over to tomorrow, we have GDP for the Eurozone, obviously initial jobless claims as usual on Thursdays, non-farm productivity, crude oil, and then Fed balance sheet. Not much for tomorrow, fairly interesting. Moving over to Max Pain, we can see that shot up quite a bit here to 446. Which is right around that current stock price. Put wall now at 445, which again points to a little bit more bullishness in my opinion, heading into the end of the week. Options around that 1.5 million. Put call ratio 2.48, which is again quite high. I don't think we'll get above 453 for the end of the Friday session, but I also don't think we're really going to get below 445 for this week, which means we're very close to a decent level to trade off of, just $1 higher from that level. Remember, this is the close for Friday that I would expect to be above this level. Doesn't mean that we can't fall a little bit tomorrow, find a bounce, and then rally into the Friday session. Certainly possible, but interesting level here at 445. Moving over to the charts, starting off with the SPY here on the hourly. Like we talked about in the opening, you can see that 200 SMA sitting at 444. Seems like a very strong level. We tested that here today, rallied pretty aggressively right up to the 144. Now we're stuck in a consolidation, still holding this 145.49 level. On the daily chart, you can see we tested that level and then rallied. Momentum still ticking down, volume still supporting a bearish thesis. But an interesting level nonetheless, and it makes sense to watch this area, potentially looking for a little bit of a rally off of that level. Hourly chart looking a little bit more bullish. Daily chart still looking bearish, but through a wick to the downside. Moving over to the NASDAQ, you can see we fell, took out my first level, took out these previous lows, came down, tested my next level, 372.85, bounced off of that into the 9 EMA and VWAP. Now we're kind of neutralized between those two levels. You can see that level is marked by the high here on 24 August. Interesting level, very close to the highs here on 8 August as well, and the close on 12 July. Definitely an interesting point, right at that 9-day moving average as well at 372.45. So we got a wick to the lows, also testing this downtrend line. We still held above it, so we did find a little bit of support, but again, daily chart showing bearishness, step down in momentum, step up in volume on that bearish candle, but interesting level here on the hourly and the daily chart. Moving over to the Russell and the Dow on the 4-hour chart, you can see the Russell threw a wick to the highs, fell throughout the session, finished right on top of the 55 EMA on the 4-hour chart, just a few cents above it. Momentum did tick towards bullish, which is interesting. If we establish a higher low here, we could absolutely look for a nice rally, maybe up to 194. That would be interesting. Dow also throwing a wick to these previous lows, very close to my level at 343.23. Ended up finishing a bullish candle on that 11 o'clock candle, still below the highly traded zone and my level at 345.24. This is an interesting development. You can see we had about 5 candles in a row almost of bearish movement. Then we got a nice wick rejection and a slightly bullish candle. Definitely seems interesting going into tomorrow's session. Moving over to the equal weighted on the daily chart just for a moment, you can see a gap down, fell, hit that level, threw a wick to the downside. Could be an initial test, and we're ultimately going to push all the way down to this 146 area. but interesting rejection from that trend line. This trend line marks the high going back to February, marks these highs here in July, and this is an interesting one worth paying attention to. Moving over to Apple and Tesla, Apple was one of the worst performers on the day. You can see it was rolling over. We talked about how it was losing momentum, turned bearish yesterday, and then today here you can see that follow through to the downside, looks super bearish. Came all the way down to the 55 EMA on the 4-hour chart, still held above 182.37 after throwing a wick to that area. And you can see we're above this previous high here from 23 August. So still technically a bull trend. The 9 EMA is just below the 21, but you can see we're above the 144, so I guess that's more mixed than a bull trend. Volume on today was much higher than the previous 2 sessions, and this does look weak, but certainly an interesting level. Tesla broke down from the 200, just like we did here previously. So we rallied into this area, broke down, rallied one more time, broke down, did establish a slightly higher low from this previous one, but it does look like we're consolidating just below the 200 at this point. Moving over to Amazon and NVDA, we talked about Amazon getting that FTC complaint yesterday, and it did fall here today, but so did everything else, so it's hard to blame it on that. Looks like the 9 and 21 EMAs are going to cross here tomorrow on the 4-hour chart, momentum bearish. We did test that 55 EMA and then hold up at that level at 134.87. Definitely an interesting one. You can see key level of volume here, thin area, and then another key level of volume. So we broke out of this previous one, broke down to the next one, and you could absolutely find some support here. Come up and test this once again. Longer term EMA is still bullish, shorter term ones rolling over a little bit. NVIDIA also breaking down pretty big. 9 and 21s have crossed, looking more bearish. We're also just barely below the 55 EMA here on the 4-hour chart. Momentum bearish, RSI bearish. It does look like this is going to move lower, down to around 457.43 at the 144 EMA, or the 200 down at 449.48. Moving over to staples and discretionary, staples continues to fall, looks weak. We have not hit that price target yet at 70.85, and it is starting to lose a little bit of momentum, which is interesting. Discretionary also breaking down below the 200. Didn't quite hit my level at 166.78. Did show a little bit of bullishness on the 11 o'clock candle. So interesting here. Could be establishing a higher low coming off of these previous lows and coming off of this most recent high. Definitely interesting. But right now momentum is bearish and the trend is bearish as well. Moving over to breadth, 50 and 200 day averages. You can see the 50-day average moved lower, tested that level at 32.22. Basically on the dot, got all the way down to 32.14 just for a moment and then bounced from that level, held above the trend line here. Similarly on the 200-day average, moved lower, tested 49.74, threw a wick to that level and then bounced a little bit. And this will be interesting going into tomorrow's session. If this bounce is going to hold, you really need to see it do it now. Maybe see it rally back into this 54 area or the 200 sitting at 55.69. Similarly here on the 50-day average, need to hold a higher low, rally back up, test this trend line, test the 52.81 area, and then we might be off to the races here a little bit. You can see RSI broke above the SMA. We're in that zone to retest. If we bounce on both of these and rally, that could be quite bullish. Doesn't mean that we have to hold that SMA, but if we do, you could see something like this where we come down, get into that zone, find a little bit higher low, then we get a pretty substantial rally for a while. Definitely would be cool to see that going into the end of September or potentially even the end of this week. Moving over to yields, if anything is going to mess up that thesis, it's going to be yields, and you can see both of these rallying super aggressively on the daily chart. Tuesday, big rally, Wednesday, big rally on both charts. And you can see the Thursday candle has already started, which looks a little bit bullish as well. Definitely not what you would want to see here. Again, if it's going to break down, you want to see a double top or potentially a lower high. That would be great. But based off the data that we saw here today, I would not expect that. So you do have to pay attention to yields going into tomorrow's session. If these continue to rally, that's going to put pressure on equities. Moving over to the dollar, you can see we threw a big wick here on the 9 o'clock candle, found strength on those data announcements. Then we ended up falling through the end of the session, which is interesting, and we ended up below these previous highs here on the Tuesday high and the overnight high. Definitely interesting, still a bullish candle, still a bullish trend, still bullish momentum, But similarly to everything else, we hit that 105 area, rejected from there, could be an initial test, but if this breaks down further, might spell a little bit of strength for equities. Moving over to bonds, J&K throwing a big wick, finding a little bit of strength like everything else. TLT gapped up, fell throughout the session, got an inside candle, also potentially a bullish setup. Momentum still ticking down on both of these. Volume not really supporting a down move here on TLT. You'd want to see this falling with higher volume. We were kind of falling on declining volume, not necessarily what you would want to see. J&K actually did have rising volume on that down move, a little bit more bearish. But like I said, quick rejection here on J&K, and it might be worth watching in tomorrow's session. Moving over to volatility, move index, candle break continuation, looks bullish. VIX threw a big wick up to that 1490 area. Momentum continuing to tick towards bullish, but not super convincing. Like I said, big wick rejection. Still slightly bullish, but I wouldn't say necessarily that this is going to break higher based on that candle. Moving over to my accounts, you can see I did lose money. It was a down day, but not nearly as much as the markets. I still had my 200 shares, which means I should have lost $666 on the day just on that account. And you can see I lost about half that, a little bit more than half that, because I did continue to protect myself on the puts and the calls and made a little bit of money trading some shorter term options. I still have a 375 covered call based on those shares at $1.21 for tomorrow. Gives me a little bit of room to the upside, but still looking to collect around $2.40 or $240 on that position for tomorrow, which is fine. And then looking at my puts here, I do have a 372 put in a small profit and a 376 call and a small loss here. I'm okay being a little bit short on that strangle in terms of bias. Markets could absolutely continue lower, at least in the short term, even if they're ultimately going to be slightly bullish for tomorrow. Could go either way. And then looking at the IWM, still have a covered call. I did trade out to the 186 call for 2 days from now, collecting $1 on that. Again, shares were down $66 on the day, only lost 44, even with the big spike early in the session. So lost a little bit less than the markets and still looking to collect $1 going into the Friday session. Let me know down in the comment section what you thought of the ISM data. Is the economy still strong? Are we going to get more rate hikes? Or have we topped out for the year and we're just looking for cuts next year? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.